traders, you're welcome to my channel. I am OT Josh, and in this video I want to talk about how you can trade using the high and low of the day. I've seen this strategy mostly, and I want to, it seems a bit confusing, so I want to make some clarification so that you know that it's not really confusing. So I'll start with the day, what the day means. In trading we have different time frames. From here, you can see them monthly, weekly, daily, 12 hour, 8 hours. So therefore, any of these is a day, because one bar in the 8-hour candlestick is one day, and two bars in the 4 hours are 2 days. So it is relative to the time frame we are trading. So right now, what we are going to do is to use our 1 hour time frame as our day. So we are choosing the 1 hour time frame. This is why before I started, let me remove the Bollinger Band so that it becomes very clear. Let me remove every indicators. Before I started, if you look here, you're going to see the time here is 15:00. You see that's 3 o'clock Nigerian time. So I'm putting this vertical line here to measure where I'm marking my day from. So you can see now we have 3 o'clock there, and from here we have 15:16, which is 4 o'clock. So I'm going to come here. You see, these were the past days that I marked while I was using this strategy. So I'm going to come here. I'm going to mark here 16:00. So now we have our day here between here and here. Now from here backward is noise. We don't need such information. So since we are using the 5 minutes, we are using the 1 hour chart, then we are going to mark our intraday using the 5 minutes. Now we have gotten our range for the day, which is the 1 hour from 3 to 4 o'clock, which is 15:00 here to 16:00 somewhere there. Now I'm going to count from this first candle: 1, 2, 3, 4, 5. Now we have our range. How? Because this is the high and this is now the low. I'm counting it again: 1, 2, 3, 4, 5. The high here and the low. Now we have the high of the day and the low of the day relative to 1 hour chart. It's as simple as this. This high and low of the day is relative to the 1 hour that I have marked. Now, for instance, if I were to use a 2-hour chart, let's say I started from 14:00 and I want it to end at 16:00, then you see this 14:00 candle here. This would be the low of the day, and this would be the high of the day. So I will not look at this price action here. I will wait until price comes back here. So I can now do like, let me reduce this amount to 50. Okay, so I can now do a 1 minute call. Why? The reason I can do this call for 1 minute now is only because if you can see that the pressure now is coming from the high of the day. When the pressure is coming from the high of the day, it comes back to the low of the day. Although the trading range is tight, this is how it works. If you look at this now, the pressure has come back to the high of the day, and it has been at the high of the day. For the 2 hours chart, it has been at the high of the day. It has not come back to this low. It has been around this place. But we are not talking about the 2 hours. We are talking about the 1 hour chart, which is from here now to somewhere. Let me see where I marked the line to here. So from here downward, this is now the range. Now we might say, okay, since this is the range, what if this candle breaks out? What if this running candle breaks out? Simple. I enter this trade later. Maybe I'll lose it. I thank God I'm using a smaller amount. So okay, it will go down. I will even do a call, a put now again. It will go down because of this selling pressure. But that's along the way. Now let's say, what if this candle breaks out below or breaks up? Then it means that our high of the day is no longer the previous high of the day. You understand? It means our high of the day has shifted. So if it breaks down, all we have to do is to put our marker here and take it to wherever it has broken down to. We have to do the same thing for an upward direction and take it to wherever it has broken down to. But now I want you to know this trade I'm taking is simply based on price action, not based on high of the day and low of the day. Don't take trades like this at the middle. When you're using this strategy, you are taking trades at the edges of the high and the low of the day. You understand? Now I want to wait. I want to pause this video now because I want you to see the price action. When the price action comes out of this range, let me remove every other indicator so that we know what we are focusing on. We are focusing on this high of the 1 hour now and this low of the 1 hour here. And the 1 hour started from, this is the use of the vertical lines in your chart so that you can mark the time frames and you can mark the section open and close. Now, this is the use of it. 1 hour, this is where we are supposed to trade inside the 1 hour. And best when the market is ranging, what we do is to trade at resistance, put option at resistance, call option at support. At the middle of the range, anything can happen. When anything can happen, you leave it alone. Now, if you put your indicators now, what are the use of the indicators? To show you support and resistance relative to what? Relative to, sorry, let me use the Bollinger Band 2 deviation. As you can see, relative to this 1 hour range, you can see how this 1 deviation Bollinger Band made a shooting star, sorry, a dark cloud cover. These 2 candles here, a dark cloud cover. This candle here is a dark cloud cover, these 2 candles, and a downtrend. That was the downtrend I took. And relative to this same Bollinger Band, you see how this wick here rejected from the 2 deviation, this one rejected and what? An uptrend. Now, relative to this Bollinger Band, you see that this wick, we see a little rejection. Now, price came down and is going up again. That means this 1 deviation, this middle Bollinger Band is not reacting with price. So we'll see, okay, it has reacted with price. Now, relative to this chart, the price to this range, you see how the Bollinger Band is working. Now you can see that even the 2 deviation Bollinger Band is not ready for the 1 hour time frame. The 2 deviation Bollinger Band upper is waiting for the 2 hour price action. This is how we trade the high and the low of the day. So okay, you see it's even going up further, but I think this is going to close as a red candle because you can see. But now, like what I have said, this high of the day has increased to where? Here. So this is how you move the levels. So we will be waiting for price to come up here and do some magic. So since there is a new high of the day, we are supposed to get a new price action. Okay, you see what I'm talking about here. If you put your 1 deviation, you can see that this new high of the day is reacting with this 1 deviation, and so you have a good reason to wait for price to come to 1 deviation because it's a source of market pressure now, and do a put trade. So I'm going to pause this trade right now and let's see how it's going to go. I want to see where the breakout is going to lead us to. Now, once again, you see the rejection at the high of the day. You see the rejection, so price started coming down. Now, this is one signal, one way you can trade using the high of the day, but you must make sure you are trading at that level. If you can't trade at that level and price is already at the middle of the range, you need to stop. You trade only at that area. For instance, you have this dark cloud cover, you trade only this candlestick. You have these candles like a evening star, you trade only this candlestick, a put above this 1 deviation. When the price goes up, you do a put. Now, if there is an engulfing candle at this point, you can't trade. Why? Because if you look, this and this and this has already given you a new range. This is now at the middle. At the middle, anything can happen. It may come down and buyers may trigger the price up. So you don't trade like at this point. You wait for it to come down here you find a new price action and you trade to the upper direction because price is moving within the low of the day and the high of the day. Now I'm waiting for a very strong signal that you normally see me trading, called the fake breakout. This is the main strategy you use with the high and the low of the day. For instance, this shooting star here is a fake breakout. If you look at a lower time frame, if you come to, let's say, the 30 seconds, you see this shooting star here. Okay, here is it. Okay, not really a fade breakout, but you can see that the candlestick went up and then broke down. Let me look at the 15 seconds. Let's see how it's going to be. The shooting star here. Let me see. Okay, here is it here. You can see that this was the trading range at the 15 seconds chart, and this candlestick broke out, and after this breakout, it came back, fake breakout. This is the signal. This is the strongest signal you can find. Now you see price has come down back to the low of the day, and what can you see? It's going back up. So this is how you use the high and the low of the day. I'm still going to pause this video because I want to see a good fake breakout. When I see the fake breakout, I'm going to start it so that I'll show you how it goes. Okay, now as you can see, it happened again. You see how the price came out of the range and then closed back down. Now this is a good signal this is the main signal for the high of the day and the low of the day. Now I would have loved if it had come back up here, closed, and then this red candle started from up here and closed inside the range, and then you go with the put. It happens the same way with the lower option. So if you are a new trader, you've been hearing about this strategy mostly for forex, but it can be used also for binary option. If you can wait, if you can time it well, you don't need to wait for hours, because this is binary option. All you need to wait is for every 5 minutes. So I'm going to give a recap. The high of the day and the low of the day starts within any time frame you want to use. I prefer using the 1 hour time frame and above. So if you're using the 1 hour time frame, how you can mark that high is from the first 5 minutes. That means the first 5 candles that started that hour. So for instance, 1, 2, 3, 4, 5. Within these 5 candles, the highest candles wick is the high of the day, the lowest candles wick is the low of the day. Then you wait for price to get to the extreme of those candles and give you a significant price action. This was the first one that I saw late and I traded it. This is the second one. I don't know if I traded this, I don't know, but this is a good trade. Even this is a good trade. Now we saw this again, a good trade. That is for the put option. Now for the call option, after we get this low, we are waiting for price here. When we see this rejection and another rejection, now this rejection, mind you, is coming from the 2 deviation lower Bollinger Band. So with a rejection from here, you can go with the put trade. If you don't want to go, sorry, with the call trade, if you cannot see a good price action, because price action reflects in every time frame, you can come to the 15 seconds chart and look for a reasonable price action, and then when you see the price action at the 15-second chart, you take it at the 15 seconds chart, and when you take it there, it will reflect at the 1 minute chart. I don't know why it's not changing, but okay, for instance, this is it here. Okay, this is it here. Now when you come to the 15-second chart, you see the hammer here. You can take it and 1, 2, 3, 4, 5, you'll be in the money. Or you can see this double bottom, a low and a higher low. You can take it and you'll be in the money. Now as you can see, this was the same fake breakout we saw at the 1 minute, although it came as a shooting star, but this is the best pattern whereby the market goes up and the fake breakouts occurs. Now you see how the price is easily moving within this range. Why? Because we are trading the high and the low of the day. The day in this case, mind you, is what? The 1 hour. If we use the 2 hours, the signal will be more stronger than the 1 hour. If we use the 3 hour, the 4 hours, the 8, the 12 hours, it will be more stronger, because the lines that you see here are formed from the 1 hour time frame, and the 1 hour time frame support and resistance is stronger than the 15 or the 30 minutes. This is just how you calculate these things. It's nothing really, there is nothing really difficult about the high and the low of the day. It just have this fancy name. You can see how this one got a rejection, and now price is coming down. So let's say you are a trend following, you're trading a continuation trend, you are a trend follower, and you see a candlestick like this going up, you might think this is an uptrend. But if you have an idea of this strategy, the high and the low of the day, you know that this is a place to do put trade, and this is a place to do call trade, and this is a place to avoid trading because we don't know what is going to happen here. So I couldn't show you the perfect trade that I was talking about. Maybe in our next video, I'll see an opportunity and I'm going to show you. If you like this video, please do wait to like, share, and subscribe. If you want to get the ebook, you can get that ebook at the description. It is not free, it's paid. You can get it at the description of this video and every of my other videos. So until next time, I need you to practice this just like I have shown you, and I'm sure you get good results with it. So until next time, bye bye.